Hello, good morning, good afternoon, or good evening, wherever you are on this beautiful planet of ours. Welcome to Sustainability in Your Ear. This is the podcast conversation about accelerating the transition to a sustainable carbon neutral society, and I'm your host, Mitch Ratcliffe. Thank you for joining the conversation today. We're going to be talking investing, particularly green investing. For 25 years, our guest today, Peter Fusaro, has gathered business leaders interested in steering capital toward climate solutions. When he launched the Wall Street Green Summit in 2002, clean energy was just a niche interest, and carbon markets were not even really in their infancy. Today, global investment in the energy transition exceeds $2 trillion annually, and climate risk is a key concern for insurers, banks, and asset managers, not to mention the rest of us, too. This year's Wall Street Green Summit, which will happen on March 10th and 11th in New York, comes at a critical moment. Insurance companies are withdrawing from California, Florida, and increasingly parts of the Midwest, creating stress that affects mortgage markets, municipal budgets, and household wealth. At the same time, AI data centers and electrification generally is increasing in electricity demand faster than the grid can adapt. Our existing infrastructure and the way we plan, finance, and build it are no longer fitted to the times. This year's Wall Street Green Summit agenda reads like a map of where capital is flowing and where it's stuck. Next generation geothermal is competing with nuclear to become a new source of clean power, particularly for data centers. Carbon removal technologies are scaling from pilots to bankable projects, and AI is reshaping both energy demand and grid management, as well as new insurance products are coming online designed to de-risk all of this transition. Speakers at the event include climate tech investors, carbon market architects, fund managers running long and short sustainability strategies, and entrepreneurs building everything from fungal leather to ocean cleanup technology. And by the way, Earth 911 is a media sponsor for the event. Peter is a pioneer in energy risk management and environmental finance. He's advised corporations, governments, and financial institutions on energy and carbon markets for decades. And he's authored several books about clean energy trading and green investing. And through his consultancy, Global Change Associates has shaped how Wall Street thinks about the business of sustainability. Peter also recently contributed an article to Earth 911 about the growing influence of climate risk on corporate and investor decision-making. It's become self-evident to many business leaders that the cost of climate damage is one of, if not the leading threat to the future of their companies. So we will talk with Peter about how the climate finance conversation has evolved over a quarter century, whether Wall Street has internalized climate as a systemic risk, and what it will take to unlock capital for these emerging sectors like hydrogen and carbon capture. And finally, we'll explore why flexibility and resilience, not just renewable generation capacity, has become the new definition of grid reliability. You can learn more about the Wall Street Green Summit at thewallstreetgreensummit.com. The Wall Street Green Summit is all one word, no spaces, no dashes, thewallstreetgreensummit.com. After 25 years of connecting capital to climate solutions, what has Peter Fusaro learned about the green trends that actually move markets? Let's find out right after this brief commercial break. Welcome to the show, Peter. How are you doing today?
Pretty well. We're going forward. Sustainability has had some nicks and cuts, but continues to move around the world. And we're now in our 25th year with the Wall Street Green Summit. So I think that's kind of a nice standard to look at. I'm watching and seeing a lot more new technologies emerge. And by the way, funding went up last year, even though people are particularly negative on climate tech recently.
I imagine when you started this in 2002, it was kind of like shouting into the void. How has the conversation overall shifted since 2002?
It shifted, frankly, because we've had millions of young people enter this sector who embrace sustainability. It's not a political issue for them. I actually think they were taught by their teachers the good stuff. I was at Earth Day 1970, 55 years ago. And I think that this is the fruit of a lot of hard work that people put in. So I actually, particularly when you see Climate Week in New York with 100,000 people in September, it's just amazing that there's so much impetus. And what happened at Climate Week was kind of interesting this year. We saw companies and countries, the Basque country looking at climate tech, the
Hmm.
Welsh government looking at climate tech, companies like DocuSign and Airbnb buying forestry offsets. These are new things. And so I was kind of more amazed at the breadth of what's taken place, besides the depth of a real industry emerging.
I'm surprised. You say that last year, 2025, was actually bigger than 24, which was a huge $2.1 trillion went into various forms of renewable and clean tech in 24. Where do you think we landed in 25?
According to what I saw in December from Bloomberg New Energy Finance, 2.2 trillion, so up about 5%, but it wasn't a down year.
That's good to hear. Frankly, I was worried, but I think everybody has really internalized this at the operational level. But do you feel like at this point, as your article argued, that Wall Street has embraced that notion that this is a systemic financial risk?
Yes, they have. I actually had a discussion yesterday with another sustainability exchange emerging, called GIX. So Wall Street likes exchanges, likes to trade, likes volatility, and certainly likes uncertainty. What people don't understand about Wall Street, it's about the edge. What's
Hmm.
the arbitrage opportunity? And one group that's been very proactive in the last several years, I've been watching them get bigger and bigger, is the reinsurance industry.
Hmm.
They are starting to not only put their money where their mouth is, but also fund things on carbon credits, carbon sustainability projects. And so they've been always very proactive, but they're even more stepping forward, not just the big names like Munich Re and Swiss Re, but smaller insurers.
I mean, given what's happened with insurers beginning to pull out of states like California and Florida, it seems to me that they must be concerned about the loss of premium payments. And so, do you see them therefore investing more in climate projects to make these places bankable?
That's probably a good correlation, but I'm not so sure
Hmm.
because after Katrina, they were dropping coverage on the Gulf Coast. That was quite
Yeah.
a while ago. And so that's one way of not dealing with the problem. And my own opinion is almost all coastal uh, areas will be impacted by climate and the storms will get more severe.
Hmm.
We blew through 1.5 degrees C last year. So I actually don't think things are going to get better in terms of storms, fires, floods, et cetera. So, but they are looking for new venues for investment. So I think
Hmm.
they're trying to balance some of that, like you said, but I'm just seeing them go into more sustainable projects, clean technologies, things like that. You normally wouldn't see them.
The way that you're describing it, it sounds like they see the rising incidence of disastrous weather events, climatic impacts, as primarily an investment opportunity. How fast do you think that market's going to grow over the course of the next decade?
I don't really have a number for it, but I do see new entrants coming in. So it's not just the big insurers and reinsurers. It's newer companies, but you've never heard of, like Kita, for example, out of the UK. They've been very proactive. Another one's Ariel Re. Never heard of them. They're looking at projects to insure. So it's a little different kettle of fish. It's not the traditional in reinsurance insurance industry. It's newer players coming in looking at risk opportunities.
Is that driven by those younger participants in the market that you were describing earlier? Pizza, for instance, was founded by Gen Z and late
Yeah, yeah,
millennials.
yes, it's true. It's kind of there is that correlation of all these young people, young professionals specifically, who are highly educated and motivated. The one interesting thing that I tell people about the climate tech industry, it's not a 9 to 5 job, but there are a lot of nice people that are collaborative and sharing, which is very unusual for a sector. But
Mhm.
I just see that DNA. It's very different.
Well, given that 2025 was slightly larger in terms of capital flowing into renewables and clean tech, are we at that tipping point where it has become mainstream finance rather than having to resort to describing itself as impact investing?
Yeah, it's beyond impact investing, but I don't think it's mainstream. And I always get people asking me about investing in the retail market, which really has very little offering for what I'm talking about.
Right.
So, the number that Bloomberg has put out is $215 trillion. So I can make the argument we're still underinvesting in this sector. I'll give you an example. Energy is an $8 trillion business. Food is a $5 trillion business. Water is a $3 trillion business. So we have these large capital intensive businesses that still are in the beginning of their transformation, we'll call it, or transition. And we're still really under investing in the sector.
Generally, what would you say we need to invest on an annual basis?
7 to 10 trillion a year. I mean, we really need to move the needle. We're not there anywhere near that, and we're seeing some pushback, as you're well aware, of wind power in the U.S. So that's not helping. The better news is I had a meeting with the Lithuanian consul yesterday. They're building out wind power. So it's kind of not one size fits all. And the game has been bending the cost curve, getting the cost reductions. That took decades for solar, but now we have 95% cost reduction, global deployment. Wind
Mhm.
power, about a 50, 60% cost reduction, global deployment. So what's starting to occur is the maturation process of these industries, where they were really outliers 25 years ago. They're really mainstream.
Well, given that, and you mentioned this a moment ago in passing, what is your assessment of the state of green investing after Donald Trump returned to the White House? Is the uncertainty he has injected into the market become a barrier to some people moving money into it that might have otherwise done so?
He has had that negative impact, but he's really energy ignorant. The US is the biggest oil and gas producer, and Trump had nothing to do with that. Technology had everything to do that with that. 3D seismic, horizontal drilling, fracking, all of this thing created all the revenue streams of a very capital intensive industry. That already had occurred. Talking about drilling in Alaska, never going to happen.
Mhm.
Talking about drilling in Venezuela, I work for Petroleos de Venezuela. Nobody understands the tens of billions that will be needed even to resuscitate a dead industry in Venezuela. Venezuelan oil production went from 3.2 million barrels a day to 820,000 now. It's totally declined due to lack of maintenance, firing 15,000 people. So what I'm getting at is I'm telling people just ignore what's going on in DC. And I've worked for 3 presidents, and look at the capital markets and look what's occurring in the blue states like California and New York. New York has had a Green New Deal. California is now the fourth largest economy in the world and has embraced climate change with AB 32, their climate law. So it's not that this is detrimental. I just think federal funding is dead, period.
Mhm.
What people don't understand, under the loan guarantee program, that was only $400 billion. And most of that money wasn't deployed, by the way. So they cut the loan program, and now they're trying to focus on oil and gas and geothermal and a few other niches. But the industry does not need that capital to go forward. And what people mistake is the energy industry thinks in 40-year cycles. So this is a blip. Exxon is still one of the largest renewable energy purchasers quietly. I hate the word green hushing, but a lot of people are doing things quietly. There's a
Mhm.
fellow out in Denver working with Clorox on supply chain for sustainability. They don't talk about it. So I think what we're seeing is people quietly doing things anyway. Because if you're a multinational company, you're going to fall under climate regulations and laws around the world. And companies are not irrational. They don't do one thing in one jurisdiction and different thing in another. So I actually see directionally more movement in sustainability, more movement in looking at beyond supply chain. I think where we're very short-sighted, and this blindsided everybody, and I'll tell you why, was AI and sustainability. AI,
Mhm.
particularly for electricity, and I'll tell you why that happened. So in 1990, I'll date myself, 1992, we had the Energy Policy Act, which deregulated electric utilities. At that time, there were 110 investor-owned utilities. There are now 40. And I've always said to people, the irony of deregulation has been consolidation, not
Mhm.
competition. And so they stopped investing in transmission, distribution. They did invest in generation, but the problem is we didn't invest fast enough, and no utility planner on the planet predicted crypto, AI, data mining, all this stuff that's needed now. And we've really underinvested in this sector. And that's going to lead to some energy shortages, and particularly where renewables were plugging into the grid. And the batteries are getting better, by the way, a lot better technology. But we kind of missed the boat here. So the numbers I'm seeing on data centers keep escalating. You know, it was 2% of energy demand in 2020. It
Mhm.
was, I'm looking now at 10, 12% by 2030. I mean, it's just the gigawatt phenomena is occurring here.
Well, and your article made this point that flexibility is the new baseload on the grid. Is that transformation going to happen enough in the context of this very negative political environment to keep up with the demand that you see, that we all see rising from electrification and data center needs?
There's going to be blackouts and brownouts. It's inevitable. There'll be weather related events where it's that very hot day in the summer that blows through peak demand. One other thing utilities have done myopically is reduce what we call reserve margins, keeping some supply
Mhm.
back from the grid. They don't do that anymore. It's down to single digits. I worked with a very large utility in Ohio, and they would model next day consumption. That they run a lot on data, on what in the past they were consuming, what the dispatch curve looks like, what they're going to do for load management. And you know, the low-hanging fruit has always been energy conservation, energy efficiency, whatever you want to call it. It just never got the traction that it really could have. So for example, I live in New York City with 900,000 buildings. So greenhouse gases in New York City is 75% buildings, not transportation.
Mhm.
And we have a public law 97 now, and there are going to be some more investment to shift 100,000 uh, buildings off oil, mostly to natural gas. There's really not a lot of solar, because solar rooftop capacity. So there's just been a very, you know, I've worked on this thing for 45 years, and 45 years later, we're still looking at energy efficiency, low hanging fruit. Now we call it prop tech. So you go to property owners looking at technologies, but it's the
Mhm.
same caveat. What's the payback period? How much does it cost? And can we afford to do this? And typically, the low hanging fruit has been, um, the solar and windows and things like that, lighting systems, retrofits, those type of things. But you start looking at HVAC systems, and
Mhm.
it becomes more expensive. And here in New York, we're trying to repurpose commercial buildings into residential. They're not built for that. So we'll even see if that even occurs.
What what role do you see AI playing in managing a more distributed and volatile energy system like we're talking about? Is it
Oh,
going to
well,
be a net benefit?
that's the net benefit. That's, the machine learning, the large language models, the things that AI is very good at will help some predictive modeling.
Mhm.
Okay. It will take that data I was describing on next day power, for example. But you're talking about consumption in what we call load pockets.
Mhm.
There's nothing there. So southwestern Connecticut, people don't understand that's a load pocket going into New York City as a problem. And we're starting to finally see Hydro-Quebec, after 40 years, will be wheeling power down in New York City. I don't remember the exact date, but they're building the capacity because Hydro-Quebec has too much hydropower.
The Trump administration is trying to prevent the shutdown of coal-powered plants, arguing that it's necessary for maintaining baseload. That's going to cost tens of billions of dollars just to keep those things open. This is an example of trying to play chess by the president in an environment where he needs to be
It's
cooperative.
not going to happen. We burned 55% coal-fired capacity at one time. We're down to
Mhm.
15% now.
Yeah.
That wasn't due to environmental rules, it was due to economics. They basically repowered coal plants with natural gas and some renewables. So this is not going to resuscitate anything. The things they're saying out of Washington, my wife has an expression, second-rate material. The cabinet appointees don't seem to have their feel for what's really going on in markets, what's really going on in the energy sector, which is 73% of greenhouse gases. And so they can make these pronouncements, but no one's going to invest a nickel. The chairman of Exxon said, I'm not putting any money into Venezuela. It's too
Yeah.
risky. They're not stupid. Unfortunately, the people in Washington are very energy ignorant. They don't seem to understand you can't mandate industry to start burning more coal. It doesn't work that way.
I want to come back to baseload reliability right after a quick commercial break. Folks, stay tuned. We'll be right back. Welcome back to Sustainability in Your Ear. Let's get back to the conversation with Peter Fusaro. He's producer and co-host of the Wall Street Green Summit, which is going to take place in New York on March 10th and 11th in 2026. And you can register and learn more about the event at thewallstreetgreensummit.com. That's all one word, no space, no dash, thewallstreetgreensummit.com. Peter, a few weeks ago, I had Dan Yates. He's the CEO of Dandelion Energy on the show. And this is a home geothermal system provider that uses heat pumps to warm and cool homes. Your article for Earth 911 pointed out that Fervo Energy has just raised about almost $500 million for next generation geothermal generation. Has geothermal technology for both home heating and cooling and energy generation hit its tipping point? Are we on the beginning of that same hockey stick rise that we saw with
We
solar?
are seeing that. That's one thing the Trump administration is behind geothermal.
Hmm.
And there is more opportunity. It used to be very cited to the Ring of Fire around the world. Now we're looking at other sites for geothermal. Geothermal is closed loop, doesn't make any emissions, and is getting its real renaissance now. So that's one positive note where everything is aligned. And the capital markets really have embraced geothermal.
It does seem that drilling is what the Trump administration enjoys.
In Texas, they call that poking holes in the ground.
So, do you see geothermal positioned to become a go-to solution for tech companies seeking to power these new data centers?
It depends how much the gigawatt capacity will be. The tech companies are going to consume a lot more energy. It's going to be a piece of that, particularly probably in California and Nevada, but not everywhere. I mean, there's been
Now,
some geothermal in New York City that's been no payback period. It just doesn't make economic sense here.
do you have a sense of where it does?
Where there are those geographic assets, so to speak, that make economic sense. That where they can do the drilling
Hmm.
and get enough capacity out to turn turbines.
Should local leaders be thinking about this as an asset that they can promote to industry to bring business to their communities?
Yes, here's the disconnect though. Most local leaders aren't particularly energy conversant. They really don't understand what we're even talking about. And even in New York State, we don't have an energy office anymore. Many states have abolished energy offices over the last 40, 50 years. They came from the first oil shock in 73. So there's kind of a disconnect. I think if promoters could sell that as business development to politicians, yeah, that would make a lot of sense. But I'm not quite sure that they're going to be marketing that. What I've seen, there's another company called Gradient Geothermal that's just sent me a press release yesterday, doing very, very well, based in Denver. They've been basically looking at emissions reduction sites where they can plug in their geothermal assets. So there's a lot of activity, but a lot of them are smaller players. They're not all the big players in geothermal yet.
Well, and we're describing a very distributed generation environment where, for instance, you could put a geothermal system at a carbon scrubbing facility in order to power it, and then it becomes self-sustaining. Where do you see nuclear fitting into this? In fact, you have a session at the summit on whether or not it can scale fast enough. Is fission and fusion on track to begin to take up some of this slack?
My own opinion is no, but I have an open mind. We've only built one nuclear
Mhm.
plant since 1978. That's the Southern Company plant, which cost 31 billion, cost overruns with federal loan guarantees. So large scale nuclear is not particularly viable, and we won't go into the waste problem and everything else
Right.
associated with that. So building nukes, that's one problem. Second problem, we don't have the workforce anymore in nuclear power. I remember working out in Ohio, and they had to bring in somebody 78 years old because they had no expertise internally. I work with Korea Electric Power, which does the best nuclear fleet on the planet. They've built in the UAE, they've built in China. I could not bring nuclear engineers from South Korea to the US due to national security issues. So we don't have the workforce. So people are talking about nuclear power that's going to happen with the SMRs. Fine. Let's see how that plays out. And most of the stuff I've seen is looking at 2032 to 2035. It's quite long dated. That's even with fast tracking, siting, and everything else. So I don't see it as the longer term solution. The other problem is we're shutting nuclear plants. So, and that's a very expensive proposition. I have sat in the only decommissioned nuclear reactor in this country at Brookhaven National Lab, and it's the only one that was ever done. So that's another problem. So they've had life extension of the fleet. There's been a roll up in the industry of with significant players, but let's just see how the SMRs come to be. They're all about 50 megawatts. I hope they can make it through the promised land. But one of the companies out of the UK is making money on the magnets, not the nuclear power. So I'm just saying there's issues here that it's not so simple to site, build a nuclear plant without the workforce.
Our investment in our skills and our training of workers to run these kinds of complex systems is it sounds like is a key to unlocking the potential the United States has to potentially reassert itself as a leader in this movement. How do you think we should address that?
Well, it's
Should
not
companies
as
start to invest in this kind of training? What do we do?
yes, they should, and some of the universities have been very involved in the oil and gas industry. School of Mines in Colorado, Texas A&M. There have been very specific programs in many colleges. I don't see that for nuclear. So
Hmm.
workforce retraining is a nice buzzword, but you actually have to do the heavy lifting.
Sure.
And so I don't see programmatically that really occurring very much.
What about fusion? I've been watching this for a couple of decades now.
Yeah.
We seem to be getting closer. What's your estimated time of arrival for fusion?
Same thing, 2032, 2035. And that's my speaker at the conference. We'll be speaking about fusion specifically. So, yeah.
Do you see that as a potential panacea once it starts to roll out? Because of course it doesn't carry the safety issues that fission does.
I, I hope it commercializes more quickly, but this is science.
Hmm.
I actually see the next 15 years, it's going to be renewables and natural gas. It's not going to be oil. We don't burn oil for power generation. It's not going to be nuclear because it's pretty static.
Hmm.
And so what's left? It's, the niches are renewable energy, which grew substantially. It's still not all mainstream, but it's getting better and cheaper. But it's natural gas. We're sitting on boatloads of natural gas, and nobody wants to talk about this, but because of CH4 and the
Hmm.
methane equation, but it's going to be natural gas. You're going to see natural gas power those data centers.
Do you see methane scrubbing and various forms of carbon capture in conjunction with natural gas as a path to a more sustainable use of that material?
That would be better, but I will tell you the carbon capture is very expensive
Mhm.
proposition. I've looked at numbers like $400 a ton. I mean, it's not quite there yet. We've seen leakage in the Appalachians from one of the facilities. The Norwegians are very advanced on this. It's kind of sporadic where it's really capturing a lot of there. I was looking at Permian Basin. It made a lot of sense because the industry does CO2 injection into old oil
Right.
and gas wells and try to marry that with CCR. I actually went to Texas and spoke about this at the Oil Museum in Midland, Texas. But we'll see. So I look at everything, but short term, and short term to me is the next 5 years, it's natural gas and renewables still.
In some of my consulting work, I've been involved in understanding how AI for science can accelerate the discovery of new materials, new compounds, and so forth. And you have a session at the upcoming event about how AI will transform climate tech investing. Can you characterize how, say, beyond data center demand, AI is actually going to accelerate the deployment of clean energy solutions?
Well, some of that is on microgrids, so it's
Hmm.
smaller scale, distributed energy. Some of that's in still in solar. We've got a group talking about tokenizing the SREC market. That's all going to be AI driven. It's
Hmm.
first that's ever been done, by the way. They're going to announce that in March. Some of that is going to still be looking at building envelopes, because that definitely is data. I have done energy audits here in the city, and it's all about the data. It's all about uh, time of day, what the consumption patterns look like. So there, AI is actually going to be proliferating all over the place in many different venues. I mean, on consumption, not so much on things like transportation. It's going to be
Okay.
more on the built environment.
Do you see it accelerating the discovery of new materials that could be more energy efficient, that could provide better insulation and so forth? Is that a factor that you're considering?
Definitely, specifically as we get more robust systems in place and quantum computing is really starting to
Mhm.
take off. I think we're going to have breakthroughs that nobody can anticipate. Sure.
You just mentioned tokenization and in the context of AI. With all that additional data, do you see any limit to what we can financialize in order to create the economic incentives to make these changes?
No. In fact, I've got one speaker, just to give you some context. So I was working with Stanford University. They have something called Jasper Ridge, which is their park. And this is in South Africa, where they were looking at biodiversity credits.
Hmm.
And I said, well, that doesn't really make a lot of sense. And I had a call in South Africa. I said, to just have biodiversity credits, it's too thin a market. Why don't you bundle that with the carbon credits? Well,
Hmm.
lo and behold, we're fast forward 5 years later, there's a group here in New York that actually has done a transaction for carbon credits, biodiversity credits, and water credits all bundled together. So you're absolutely right. There's no limit to financialization of these markets. And I think that makes a lot of sense.
Now, a lot of this is going to be initially available in private equity and to the reinsurers that you were talking about. Is this going to be long term an opportunity for individual investors to participate in? And when do you see that coming to pass?
I'm seeing sporadically that happening. I'm thinking this tokenization of the SREX, which, to be blunt, you have to explain to people what a solar renewable energy credit is. When you start using acronyms, they don't know what you're even talking about. There's another group which is actually doing projects in Africa for solar, which is selling into the retail market. So I'm starting to see a little bit of this, because for 25 years, people have asked me, where can I invest? And I said, well, if you're not an accredited investor, you can't. But I think that's going to start to change, particularly with this tokenization, because then they can actually have an offering on the retail market. I don't know if Coinbase will be doing this, but it's an opportunity here. And as I said, I spoke to an exchange yesterday. They've been approved by the SEC as the first sustainability exchange in the US and whatever. But they were only looking at equities. And now they're going to broaden themselves into commodity, which makes a lot more sense. So carbon credits, renewable energy credits, et cetera. Now they're getting much more interest, to be blunt.
Well, in 2026, where do you see the most compelling risk adjusted opportunities for investors, whether accredited or not?
I think solar is still pretty easy. I think the batteries, depending on the technology, are going, and I'm going to a battery conference in 2 weeks here in New York. They have it once a year. That seems to me pretty viable if they can scale and commercialize and grow. Wind is off the table except the completion of the Rhode Island plant, unfortunately. They've really built out a big wind infrastructure here in Brooklyn, and I don't know what's going to happen to it now. And I think anything touching on robotics makes some sense. I'm actually involved with a company that's robotics hardware as a service.
Hmm.
So I think robotics, because people don't like all the mundane tasks in the energy sector, like cleaning solar arrays or recalibrating devices. So I think robotics, and we're not so far behind China. I went to Carnegie Mellon, which was the first robotics institute on the planet, first computer science school on the planet. I think robotics are actually going to be very additive.
I'm curious, what do you think about AI and quantum as investments now, given their potential to contribute to a more rapid transition?
I think you gotta if you got a good stomach, do the investment. If they're not mature,
No.
there's a lot of volatility, obviously. So the Nvidia chips, I know that's come off, and others. So I think it is the future, but it's kind of the entrepreneur's perspective. You entrepreneurs create the future, so the future's coming. But to make an actual prediction, it's volatility. That's markets.
I want to turn to what is potentially coming that's bad for just a moment. And that is that your article in Earth 911 notes that mortgage markets depend on insurability. And as you know, that's not guaranteed anymore. Are we approaching a moment where climate risk is fundamentally going to reprice real estate in vulnerable regions? And what do you see that doing to the broader economy?
It's already happening. Yes, that was the thrust of the article. There's more
Mhm.
risk, and they're going to have to manage that risk. I think the broader economy, which is so consumption driven in the US, it's going to have a problem. I mean, housing is a really large industry.
So you see those costs flowing through to impact consumer spending and potentially even the purchase of new technologies as they come online?
Yeah, that's going to be expensive. It's not going to get cheaper. It's going to get more expensive.
Any thoughts on how we avoid that roadblock?
No, because the other option is you just drop coverage.
Do you think that's going to happen?
Yeah.
Where do you think it will happen? I mean, California is already that's the case. I live
Florida.
in Southern Oregon where I could get insurance on my home with two companies and only two companies.
Well,
Where should we be worried about it?
the Gulf Coast, particularly California, obviously, not the Northeast, not the Midwest so much. Yes, there have been more severe storms and different climatic events. There's more unpredictability in the weather, and unfortunately, they've also fired people from NOAA, so
Hmm.
National Oceanographic Atmospheric Administration. I mean, it seems there's a lack of expertise seems to be our bigger problem that no one wants to talk about. That when you decapitate federal agencies, you actually lose things in society.
Is it the disdain for expertise that we have to overcome as a nation?
Oh, definitely. When 54% of the population reads at a sixth grade level, and people are staring at tablets, and the SATs have gone down in the last 50 years twice to be recalibrated 100 points. I was a professor at Columbia University, and I had problems with the students in terms of deductive reasoning.
Hmm.
So I think we've got some really major knowledge gaps in this country that are not being addressed. And I think the denigration of elites and academia is disgraceful, because if you just want people preaching to the choir, they're going to sing the choir back at you.
I'm curious as you look at the ultra high net worth people who are resisting some of these new tax proposals, not to advocate or not advocate for them, do you see them as having alternative destinations for their life and wealth that makes the United States less attractive as a place to anchor their business and their living?
Well, the real tech bros already have the bunkers already sited. Some of them are in New Zealand, as we know, and Hawaii.
Bunkers,
It's
though, are for a
Yeah, I know,
meltdown.
but
What about
they're
what about
looking
just
at
day-to-day
society.
business?
I look at societal risk now.
Hmm.
I don't look at this thing monolithic. It's multi-pronged, in my opinion. There is a calculation here to create a lot of chaos and dissuade foreign people to come and be in US universities, which is a bad thing, in my opinion, and foreign workers. My grandparents came from Italy. They were immigrants. That was no big deal about that. I actually think immigrants are very driven people and work damn hard. So I think we're turning our back on a lot of things, but the knowledge capital that's being lost is disgraceful, uh, because that's what drove our society into a service economy.
Hmm.
We're not agrarian economy anymore, which is the 19th century model. And we went through industrialization, post industrialization to really where we are today.
So your article concludes with the phrase, risk is rewriting the rules and resilience will rewrite the opportunities. As you bring everybody together in March in New York, what's the one message you want attendees to take away from the Wall Street Grain Summit?
That we can do this thing. It's a heavy lift, as my dad would say. I've spent 56 years now in sustainability before it had a name. I was eating organic food in Pittsburgh at a food co-op in 71. So I've done this stuff. And what I've learned is change takes decades.
Yeah.
It doesn't happen quickly. The good news is, I think, because generationally, more young people have engaged on the issue of sustainability. So when I was on the board of the University of Michigan's Irv Institute for Global Sustainable Enterprise, I used to make a joke. I had a call option on young people. So my takeaway is I have a tremendous valuation on young people.
Hmm.
I'm 75. They're inheriting this world and they get the sustainability message globally. I've been to 50 countries. So it's not, they're different. They're actually very similar in their thinking. And so that is kind of that optimism that I still believe in. So that's the message of the summit. I bring in no government officials, no academics. It's all people in the trenches with solutions. And that energy level is very good.
So how can our listeners keep up on everything you do? Because you're putting out a lot of great information.
Well, I sporadically do a podcast or write an article. Uh, I don't blog really. I mean, I do my summit. I've got another group. I've got another enterprise, which is my Wall Street Green Cap Intro, which we're relaunching to bring monies to the SMEs market, small, medium-sized enterprises from accredited investors. And that's a global platform, by the way, because I see the phenomena around the world. It's not like this is happening here, because we mostly talk about the US. It's happening everywhere.
Yeah.
And so that's the better news.
Peter, thanks so much. This has been a really interesting conversation, and I'm looking forward to the summit.
Well, thank you very much, Bishop. I appreciate it.
Welcome back to Sustainability in Your Ear. You've been listening to my conversation with Peter Fusaro. He is the founder and co-host and co-producer of the Wall Street Green Summit, which will be presented in New York on March 10th and 11th in 2026. You can learn more about it at thewallstreetgreensummit.com, and that is all one word, no spaces, no dashes, thewallstreetgreensummit.com. I think the key idea to take away from this conversation is Peter's exhortation that we can make the transition if we are determined to push through the difficult political issues that we face now to focus on two things. First, making the economics of a renewable energy powered economy work. And second, to power that transformation, educate coming generations to do the intellectual and physical labor of building, maintaining, and continually innovating to reach a new phase of human history that does not deplete the planet's resources for future generations. The U.S. is currently steered by an administration that, despite its complaints that the market doesn't have enough freedom, is imposing a retrograde ideology on technologies, industries, and individual companies. And that's why, as Peter pointed out, many companies that recognize the impending operational crises that will emerge as extreme weather and rising sea levels push supply chains and consumer spending into chaos need to run under the radar. The rickety and fragile energy infrastructure needs an upgrade, both in the short and long term. Over the next 10 years, we must continue to accelerate the transition from natural gas to more profitable solar, geothermal, and wind electricity generation, while we prepare to manage an incredibly complex new grid that puts power where it is needed, when it is needed. And the key to that mission will be the AI that is capable of managing such intricate complexity in real time, which, at the same time, is driving demand that will result in brownouts and blackouts if we fail. It's a very difficult time, particularly because no one, not the boomers or the millennials and Gen Z, wants the transition to take decades. But change does take time. It does take decades, which requires coming generations to rethink their expectations, to move away from the sense that everything must happen immediately. Our immediate gratification society needs to wake up so that we can recognize the long-term need to invest, not for next quarter's public company reporting cycle, but for all of our benefit. We can build that capacity for patients by investing more in education so that the American people are equipped with the knowledge and habits of thinking that can recognize the steps needed, the inevitability of failure that will teach us rather than signal failure. And we need patience. We need tolerance for the mistakes that lead to more learning. And with that, youth will continue to improve our world. It's time to look ahead, not back to a golden age of an elderly imagination, but to a sustainable, carbon neutral society that our descendants will be proud to pass on to their children. So strap in, folks. It's going to be a wild ride. And we'll be here with the stories of success and failure that will help humanity continue to learn and advance. I hope you'll take a moment to take a look at any of the more than 540 episodes of Sustainability in Your Ear that we have in our archives. Please share one with a friend. Writing a review on your favorite podcast platform will help your neighbors find us. Folks, you're the amplifiers who can spread more ideas to create less waste. So please tell your friends, family, and coworkers, even the people you meet on the street, that they can find Sustainability in Your Ear on Apple Podcasts, Spotify, iHeartRadio, Audible, or whatever purveyor of podcast goodness they prefer. Thank you for your support. I'm Mitch Ratcliffe. This is Sustainability in Your Ear, and we will be back with another innovator interview soon. In the meantime, folks, take care of yourself, take care of one another, and let's all take care of this beautiful planet of ours. Have a green day.